Well, trade talks between the U.S. and China and Beijing will continue into Wednesday, one day longer than expected. The meetings are the first face-to-face negotiations between the two countries since President Trump and Xi Jinping agreed to a 90-day truce in the trade war that happened on December 1st. The president seems pleased with the negotiations so far. He tweeted today, talks with China are going very well. Washington Post global economics correspondent David Lynch has been covering the trade dispute. He joins us now from Washington. So, David, has there been, and is there any way to gauge if there have been any significant progress in these talks?
Well, I think it's early for there to have been significant progress. I think we can say that the initial round of the talks has gotten off to a good start. They do seem to be closing the gap in some areas, but there's nothing definitive yet, and there's still several additional rounds before any final agreement would be in the offing.
So, David, walk us through sort of what the big picture is here. What would a potential deal like, and what would it have to include for both sides to really settle this once and for all?
Sure. Well, President Trump has a series of complaints about Chinese trade practices, which he says unfairly discriminate against American companies, foreign companies in general, operating in the Chinese market. And so the president wants to see significant structural changes in the Chinese economic model, in Beijing's industrial policies. Those are going to be hard to get because Chinese leaders have resisted previous efforts to get those sort of changes. The president also doesn't like the chronic trade deficit that the U.S. runs with China. We buy a lot more from them than they buy from us. And so certainly one part of a deal, perhaps not the most important part, but a significant part, will be increased Chinese purchases of American goods like soybeans or liquefied natural gas.
You know, China's economy has slowed in recent weeks and months. Does that give the U.S. leverage in these negotiations?
Well, the president thinks it gives him leverage. He's said several times that the Chinese stock market has been performing quite poorly, and he's right about that. The major indices over there are down about 25% over the past year. But Chinese leaders have been trying to slow the economy or wean the economy from its reliance on debt, from chronic borrowing. And so it was always the case that China would slow from the double-digit annual growth marks that it had achieved in, a few years ago. But certainly for Chinese leaders, the trade war is an additional complication, one they would like to see go away.
So even if, let's say, China does agree to certain trade conditions and terms, how would the U.S. be able to ensure that China actually lives up to those promises?
That's a critical question, and my understanding is that the U.S. side itself hasn't fully worked out what sort of enforcement or verification mechanisms an agreement would require. There's been talk that the U.S. might leave in place the current tariffs that President Trump had imposed on Chinese products last year as leverage in these talks, might leave those in place to make sure or to encourage the Chinese to comply with whatever terms they agree to.
Can you explain for us, David, what's at stake with the global markets and just the international economy if this trade war doesn't get resolved?
Sure. This is something that investors are worried about. It's been sort of a cloud over the global economy and over financial markets for several months now. The U.S. and China together account for about 40% of the global economy. So if those two giant partners are at odds, that's something that's going to cause trouble for investors globally. Certainly there's been talk that the U.S. under President Trump might decouple or disentangle the American economy from the Chinese economy. Over the past 30 or 40 years, the two sides have grown quite closely entangled. U.S. companies have moved a lot of production to China. The Chinese supply American technology, American farm sector, or key customers in that regard. And so if the two sides end up having to rework supply chains and overhaul their entire economic approach, that would cause turmoil in markets and would be a negative in the short term anyway.
David Lynch comes to us from Washington Post. David, thank you very much for your time.
Anytime.